Wednesday, October 15th. Today's Alpha Picks Day. A big show. You know, we got a lot to go over. Alpha Picks, I'll go over some of the outperformers on Alpha Picks. I will maybe live at 12 noon today for the Alpha Picks scalping. CRDO. It's a big one. A subscriber who has TrendSpider for years, Eli, emailed me yesterday about the analytical way that AI is looking at the 4-hour algorithm. I'm going to explain the 4-hour algorithm. I'm going to explain everything. Had a ton of signups for TrendSpider over the past the weekend flash sale that they just had. So we'll go more into the 4-hour algorithm, how you can use it, blah, blah, blah. The markets yesterday were just nuts. My Friday sales, they were gold, but these stocks are up. Did I make a mistake? I will go over my planning and everything that I went over. And then we're going to get into specific stocks, energy, rare earths. Then we're going to go over growth is the key in any market. And I'm going to use natural language with AI, both in Seeking Alpha and Perplexity. So you don't have to pay for Perplexity. It's free. So I'm going to show you how to do research in Perplexity for free. You don't need to pay for this stuff. I will literally show you how to do it. Now, first off, QQQ. 4-hour algorithm, you can see it on your screen. It got you out with a 3% gain. Not at all-time highs, but very close to it. Did I get out? No. The reason I use the 4-hour algorithm on some of these larger ETFs to actually just look at the trend. And so when I see this trend, what do I see on this screen? Well, I see moving averages. They tell you the trend that you're in. Are you in a bear market? Well, this is a 4-hour time frame, okay, on a chart. The 200-day is moving positive. The 50-day is moving positive. The 9-day is moving a little bit negative, but the 21-day still looks like it's turning around. So are we in a bear market? Well, let's go a little bit long term, okay? Let's look at a weekly because that 9 and 21 are still moving positive. The 50 still positive. The 200 still positive. Yes, these indicators are stretched, but they can stretch a lot longer. See it back here in September of 2020 all the way to January of 2022. Then you took a leg down. Is that what we're looking at? Well, if that's what we're looking at, staying at this level while the market's going up, again, look at this. QQQ, when you entered into this in September 2020, okay, September 2020, it was selling for 272. Then you go to January 2022, almost, a year and a half later, you're at 400. So even the indicators staying flat, the market still moved up. So you don't want to get out of a market just because the indicators are stretched. And I use this 4-hour algorithm to say, hey, I need some caution. That's all I need. Now, will I get out? Typically on QQQ and others, I will look at long term. Now, monthly, yes, I got out somewhere in the neighborhood of April of 2022. Was I too late? Absolutely. The market had already turned down. We knew that the Fed was hiking interest rates. So is October a dip month? Well, FYI, October so far in the month, you're up 0.13. Doesn't feel like it, but it's actually a green market so far. So October is a green candle. Doesn't feel like it, because you've gone all the way up to the high of 613 on QQQ. We're at 604 in pre-market. So you want to use these charts to help you. That's part of what I'm trying to teach you. What I'm trying to teach you is my way of thinking. And the way I think about these things is we're in a long-term bull market. And so day-to-day fluctuations for me, for the most part, don't play a role in my portfolio. So I want to go over a couple of things. But first, I want to go over two things. First off, if you live in Georgia, watch this video. I will put it in the newsletter. Please watch this video. It's about Georgia Power and getting our rates lower because we're one of the highest in the country. We deserve lower power rates, and they've raised it. And this is a way you can lower it. And again, it takes 5 minutes. And if just one person watches this in Georgia and then goes out and votes, it's coming up in a couple of months. Go out and vote for your public commission. It's literally the only thing on the ballot, but it's worthwhile. And Hank here guides you towards why you want to vote the way that you should. Does a great job. And I will be voting, yes, that way. Now, the other thing I want a word from a listener. I got this email. Gary, you said you don't want to thank you. Instead, I will tell you that because of your podcast, I made a ton of money. I'm a Central Illinois farmer. We should all be thanking farmers because they're taking it on the chin with the tariffs. And he says, I'm getting pretty beat up by these tariffs. Buying into this market and waiting for the dip has proved out. Subscribe to Seeking Alpha a year ago and buying Alpha Picks portfolio when they were announced. The value generated by that has offset and taken the sting out of low commodity prices. This is real life. This isn't a multimillionaire like me sitting here and telling you I'm gaining because of my process. This is Seeking Alpha, Trendspider, and Alpha Picks. That's it. Sitting in the tractor, listening to to your podcast is his daily favorite. Keep up the good work. That's it. It's simple. And again, that's from a listener. And I get emails like that once or twice a week. Okay? I'm happy to be able to provide something that teaches everyday folks like me just win in the market. I'm not the only one out there. So there are plenty of other podcasts out there. And find the one that you like. But if you like this one, I've never asked this, but if you like this one, share the newsletter, share the podcast. I just hit 1 million streams. I can't believe that my voice was listened to on Spotify 1 million freaking times. It's humbling. Honestly, it's humbling. But I thank everybody that listens. I thank everybody that takes me for my word because I haven't scammed anybody. I'm not a shill guy who's out there pumping stocks. I sometimes tell you what I buy. I sometimes don't. I sometimes do things out of norm. But again, I try and share what I do. I try not to lead you into stocks or lead you out of stocks. I try and do things just saying what I think. And remember, that's why I say the podcast is about me. It's not about you. It's not about your portfolio. You're making these decisions. Now we get a new Alpha Pick. And you know, again, that listener mentioned he bought into Alpha Picks. There's a lot of different reasons why you want to get into Alpha Picks. And let's go over what Alpha Picks is. It's a data-driven portfolio of 2 stocks per month. You buy on the 1st, you buy on the 15th. Okay? It's very simple. When they tell you to sell, you sell. This is not my portfolio. I am just invested in this portfolio quite large. And we get a pick again today. Part of what you get with Alpha Picks is a great Friday summary. And this is the summary from Friday. There's a lot more that goes into this. They actually analyze the portfolio. But again, this was on Friday, where Wall Street endured its biggest one-day loss since April as President Trump threatened China with new tariffs and the VIX spiked. So Trump is threatening all of that, and you're seeing it go up while gold is historic rally, demand, and risk off. You want to know why Alpha Picks is subscribing to gold in the recent months? Go down to the Daily Stock Pick newsletter, dailystockpick.substack.com, and just go to this paid section. This is free. FYI, it's under the paid section. It is 100% free. It is also on Spotify. It's a long episode. I put it up here commercial free. It will premiere tonight on YouTube. Okay? But you can watch it. You can listen to it. Again, I put it out there on Spotify because I think people should listen to it. And Steve is telling you why the quant has all of a sudden gone to gold. He tells you about it. So I like this one. Now, let me go over a couple of Alpha Picks because I want to go over 2 specifically. AGX is one that I've been adding to recently. Why? 4-hour algorithm got me in here at 228. This is not a stock that I would normally get into. But look at that performance. It's really good. 228 up there. I saw it had a positive momentum. I said, you know what? This one looked like it capitulated right there. It looks like it's going for another run. And we can look it up in Seeking Alpha. You don't need let's see. Why doesn't this look? Oh, why is that doing that? AGX. We want to look up AGX. And we're just going to click on Argan. I think it goes into the A. I will bring that up later because, again, Seeking Alpha launched something pretty freaking cool. But it's a hold in the quant. Okay, and if we look at this, I looked at it. I said nothing has really changed for this one. And the momentum is probably just a technical strategy. So when I added to it, here at 228, it's a technical strategy. I added to it. Over the past couple of days, this has shot up. I got lucky. It lost on Friday. It lost confirmation. Did I sell? No. The 4-hour algorithm didn't tell me to sell. Now, I didn't buy it this 228. I think I bought it around 240. It was in an upward trend. So I didn't time the 4-hour algorithm. I timed this after a couple of days. I said, this looks pretty good. I'm up like 25% in this in just 28 days. It's a pretty good one. Okay, this was up 4% on Monday and over 1% on Tuesday. We're Wednesday. Where's AGX in pre-market? It is up 4.25%. It's pretty good. That's an alpha pick. Now, I also want to go over an older alpha pick. Okay, an older one that just reported earnings that I know I have gone over many, many times. It's Wells Fargo. This one was up 8% yesterday. 8% after blowout earnings. The 4-hour algorithm just got you in 85. If you look at this one from a long-term perspective, that is an upward trend. Now, Wells Fargo, we can go over here and look in Seeking Alpha. What is it in the quant? Let's look. It's a hold, and it's been a hold all the way since 77. I have held this one in large. Remember, in April, I went in big on this one. Back in April. Why? Because look at this pullback back to the old resistance, the old 2022 highs. It resisted here in May of 2024, and you can see it. It pulled back. I bought more down here in 2024. I like this company. It's rebounding. Good stock, good profits, good products, and new good management. And I believed in it. So I went here in April. I said, ooh, this is a good opportunity. We're down here. Was it the best opportunity? No. But I bought it that 62. I'm perfectly happy with this. So again, I may be live today on Substack at noontime for the Seeking Alpha scalping of right here, Alpha Picks. And if you want to see how to scalp Alpha Picks, go down to the education section. This one is perfectly free as well. You can see we've just got a couple of rules. It's a data-driven stock. You go to the website at noontime. If the actual stock is a lower market cap stock, it should move higher. You trade it on a 1 to 5 minute stock candle. I have added in a ton in the most recent, 3 or 4 buys. I'm up somewhere in the neighborhood of 40% on some of those. So again, Seeking Alpha and Alpha Picks, and I will bring this up. CRDO, which I think most of my listeners probably should have. This is an Alpha Pick stock. It's also, back in January, it was picked as the top 2025 stock by Steve Kress. In January, as a winner this year. It's up 7%. It was down 13%. This is a buy the dip stock. I think it's still, we'll go in and look at Seeking Alpha, but CRDO right here got you out yesterday. Am I trading this on the 4-hour algorithm? No, you can see I bought at 149. Where are you trading right now? 139. I have an opportunity to buy it even lower. When you look at a weekly, this one, the indicators are extended. The MACD, super high. You're trading at the top of the Bollinger Bands right there. But if we go over to Seeking Alpha and we say, okay, what is it in the quant? We can go to the summary. It's a strong hold. And I've got my notes here, by the way. I bought this back in February as part of Alpha Picks portfolio. I've got a ton of other notes. Again, I journal my trades. Wall Street says this is worth $159. That's 23% upside from where you closed. And you can see, if you look at here, the factor grades of the quant, valuation, we've gotten better than 3 months ago. Growth, It's been A+ the whole time. Profitability, 3 months ago, this was a D+. It's a B- today. Again, momentum, better than 6 months ago, which was B+. Revisions, they're revising this up. So again, you want to do your own research. You can use, we'll go into the AI stuff, but this is an AI infrastructure play. Do research on it. You want another one? I will give you another one. And this is specifically out of Seeking Alpha. Here's a stock that I've traded in the past. I don't currently own, but the stock literally changed from a hold to a strong buy today. Today, it changed from a hold to a strong buy. ANET, Arista Networks. Wall Street has a 14% higher price target. Here you go. 159. It's 15.07% higher. Okay? It dipped yesterday almost 6%. From 3 months ago, we can look at this quant. Okay? 3 months ago, the valuation, it was a D and a D- 3 months ago. It's a D+ now, meaning the valuation got better. Now, if you want to know what that means, go and look at the AI virtual analyst report, and you can look at it. The valuation right there, it explains everything. Now, growth, it used to be a C, it's a B. Again, profitability has been an A+ the whole time. Momentum, it's gotten better momentum, which is very important to the quant. Revisions, and you can go here and you can see we just moved to a strong buy right there at 142. If you want to see how Steve Kress looks at these things and how again, Steve Kress is the guy that builds these. He's the guy that does the quant. He's right here. Go and listen to this hour-long presentation. It is worth your while. It is getting a lot of feedback from other listeners that say they learned a ton. He shows you in his screen. You want to get alpha picks? Well, save your money because he shows you the entire portfolio on his screen. Go and get it. Now, if I want to trade Arista Networks and I want to get in, I want to find a strategy that gets me in. Arista Networks, the 4-hour got me out yesterday. Am I happy getting in outside of the 4-hour algorithm? No. So I would put an alert in TrendSpider and say, get me in the next time it has an entry in the 4-hour. Why? Because the 4-hour wins 57% of the time. It just got out of a previous run of 48%. It got you in at 149. By the way, in pre-market, you're at 142. You're getting a better buy than here. But I want the assuredness of, hey, if I actually buy this, then 57% of the time I win over the last 2 years. The average win is 12%. So I'll build a strategy on that. And I want to go over the back testing of this stuff. Because Eli, who is a long time, let me look at this. There we go. I was over here to show you the Steve Kress stuff. Eli, last night, he said, hey, I hope you had a wonderful time at Monday Night Game. I had a question. I've used TrendSpider AI to analyze the 4-hour algorithm. I talk about this all the time, the 4-hour algorithm. And every time, no matter how good the results are, the 4-hour algorithm gets the same beginning statement from time that the time frame is too short. I'm wondering if the time frame is wrong by accident. And again, he's talking about the back testing. And when you get TrendSpider, you get this back testing down here, and you can see the performance. It says, hey, this stock on Arista Networks, it gives you 133% over the last 24.7 months. Versus buying and holding over the last 24.7 months makes you 202%. So buying and holding this particular stock over 2 years was better. Now, Eli's question is about that back testing. So I want to take you through why AI always says you should back test longer than 2 years and why I don't subscribe to that. Okay? I know the TrendSpider data engineers. I have gone back and forth with those guys many times about strategies I built, about some of the market queries that I have, about all of the things that I use TrendSpider for, because one of the reasons why I subscribe to TrendSpider is down here in the bottom right, there's a contact us button. They are literally the best business that I have ever dealt with from a customer service standpoint. It's unbelievable. I can ask them anything and they get back to me within a couple of hours, and they get back to me with detailed answers, and I love it. So I know these guys really well. They've always told me, hey, you can't backtest for 2 years, but let me explain why I use 2 years. So I'm wound up developing the 4-hour algorithm around August of 2020 because I had retired in January of 2020. I had lost over half of my portfolio by the end of March 2020. Imagine retiring at the age of 49 years old and then losing half of your portfolio within a month. Imagine the panic. So I didn't have an income at that point. My buddy and I, who I retired with, we went into research mode. Everybody was at home. You know it. The world was shut down. We found Trendspider and we found technical strategies, and we based this on the MACD. We did a lot of research and we said we want the MACD indicator as our main source of when to get in and when to get out. So why does AI tell you to backtest more? Because historically, a more well-tested strategy can be launched in Trendspider engineers. And remember, all the AI was trained, Sidekick up here in the upper right, it was trained by the AI, the engineers at Trendspider. That's why it tells you to go back more than 2 years. That's why Perplexity tells you to go back more than 2 years, because data scientists want more data. Why don't I? Okay. Let's take you back in time, because when I first started using the 4-hour algorithm, I didn't want to test with COVID, because every back test that we did with COVID in there, it saved you from that downturn. It was unrealistic because every strategy outperformed buy and hold. So I didn't want it in there. So I always removed COVID from my back testing. Then it was true that 2020 was a super bull market. The 4-hour worked great. It got me in. It built my confidence. I was able to look at these charts, quickly determine my risk and reward, and I was set. Then the big test was 2022, the bear market. 4-hour algorithm saved me hundreds of thousands of dollars, if not 7 figures. Again, I still lost, but I didn't lose the 40% that the market lost. 2022 QQQ was down 33%. I wound up losing less than 20% in my portfolio. For me, that's a win. Because remember, I don't time the market. It's time in the market. So even in 2022, I didn't get out of the market. And if you were in the market, unless you were shorting the market, you couldn't have made money. And if you made money, you were betting on the downside. And I typically will not I won't bet on the downside. By 2023, I was sure that we were in a bull market. Why? Because the indicators changed. Just go and look at a chart of QQQ. Okay, and I'm explaining this because everybody's telling me, well, we're heading for a market crash. We're heading for a market crash. Go and look at a monthly chart of QQQ and you tell me, would you have gotten out here in January? Would you have gotten out here in February in 2022? I didn't wind up getting out until April. Okay, I had enough. And it was the monthly chart that told me that, because we couldn't gain back above. We were hitting lower highs. So that was the big test. And 2023, the 4-hour algorithm started getting me in and started making more wins. Even the beginning of this year, when I sold high 6 figures of Apple stock that I held in my portfolio back in December because I made that trade, I had a ton of capital sitting there. And did I buy in January? Yes. Did I buy in February? Yes. I was strategic, but I didn't go all in. I did go all in, and I said the term shut up and buy in April. That's when I went back in. Why? 4-hour algorithm told me to. It was a good test of the short term, and I said, I think we're done. My point is that the 4-hour algorithm, it's not foolproof. It's a guide for me. It's a way to view my risk and reward. It tells me the average win, down here in the tabular data that you see down here in the back testing, it tells you your average win, tells you your average loss as well. And each time the strategy has been deployed. Again, you can build a strategy for yourself, whatever you want, using natural language. And FYI, they just put out this YouTube video, and Mike goes over how you find stocks using natural language. It's super, super simple. Again, TrendSpider is my platform. Now, how do you get this? Well, you go over to Linktree. It's the top link, okay? You can get this for $52 a month. It is unbelievable. If you sign up for a yearly subscription, I then send you my 4-hour algorithm and all the tools I've developed. These are the tools that I use. This isn't some scam to get you into TrendSpider and tell you, hey, this tells you to buy and sell. No, you use this as a guide. So when Eli asked me, hey, why does it always tell me to backtest more? It's because it wants more data. Now, let me give you a couple of stocks that I sold on Friday that are actually up from where I sold them. But I want to give you an idea of why I sold them, okay? NGD. I sold this at $6.81. Right now in pre-market, it's at $7.28. It's around a 6-7% difference. Am I upset that I sold it? No. Why? Because the 4-hour algorithm here. Now, the 4-hour algorithm doesn't outperform. Okay, buying and holding new gold over the last 24 months makes you 618%. You win 59% of the time. The average win is 16%. Why did I get out of this one? Well, it's a top. You can go over here into my Seeking Alpha, and I've got a note. I've got a note up here, bought as the top second half stocks. And I bought it using the 4-hour algorithm on this dip. Because I didn't buy June 15th when he announced it. I bought it on the dip. I bought it at 457. I bought it at 433. I didn't get out here because I said, you know what? Maybe the 200 day is going to provide some support. It did. It bounced off. Then I got here again and I said, I wanted to add more. I got out with a 57% gain on the buy that I bought down here. Am I unhappy that it's now up 6 or 7%? No, I had a plan. I executed it. I tell you this because you will always second guess your sales, your buys, everything. My goal and my entry was based on the 4-hour algorithm. Does it outperform? No, but it makes me 281% over the last 24 months. I'm pretty okay with that in a sector that I know nothing about, gold. I want to also point out to you that back here, let's see, back here in July, yeah, I think it was this. This is July 11th, okay? This is BTG. I was researching BTG because it was the top stock, and I found SSRM was actually the top one. Now, I'm not going to say the portfolio that I'm subscribed to because I can't tell you exactly what that is, but I trimmed SSRM. Why? Now, and I didn't get out of it. I trimmed it. Why? Because I identified back here, if you look at a weekly chart, I identified a previous all-time high back here from July 2020. And that's all I did. And I put that line there. And I said back here in 2022, it rejected. Well, in the 4-hour algorithm, I had an alert set up for when it got out. I saw it rejected off of that. I took an 80% gain in this because yes, it was an alpha pick back here in June 13th. I owned it as part of that. And now I have the allocation I added to my winner. So why did I sell? I identified that high. Again, meanwhile, gold continues to soar. This one's a little higher. It hit 4,000. Gold hit 4,000. We could be going to 5,000. So again, that's why I did that. And let's go over the markets. The S&P gapped down yesterday, revisited Friday's lows before bouncing hard and closing, unchanged. And if you saw the Dow yesterday, it was crazy. Bitcoin still under pressure. NASDAQ, S&P, Dow futures rise as upbeat earnings. We're seeing financial earnings come in strong. They're coming in strong. And like I said, gold continues to rise. And then you've got Broadcom. This was announced before. The OpenAI partnership is now the participation trophy of the market. Literally, second grade, they give you a participation trophy even if you're bounced out of the spelling bee in the first round. Well, that's what OpenAI is doing is, hey, we want to give you a participation trophy. This is Broadcom. And these are the ETFs that own Broadcom. And they all pumped, okay? And Broadcom pumped. We're in an AI market. ETFs are a good way to protect yourself from single stock exposure. So don't just look at these ETFs and say, ooh, I don't want to own an ETF. I want to own just specific stocks. And ETFs are a great way to leverage single stocks as well. Again, there are tools out there. Now, we're still in a government shutdown. If you didn't know, we are in a government shutdown because nobody's reporting this. The government being shut down, prediction markets raise odds of prolonged. Again, prediction markets are saying it's 30 days. It rose to 66%. We're in government shutdown 14, 15? I don't even know. Honest to God, I don't care. It's not affecting the markets. The markets will start to care when it matters. But the charts tell me the market doesn't care. Now I want to bring up energy. This was a stock that was in the August watch list. If you pull up the newsletter and you go back here and underpaid, you'll see an August watch list. Here's September, here's October's. This one, it's pumping again. It's pumping again. I built several watch lists, but Bloom Energy is one that's pumping. Now, Bloom Energy, do you want to buy it? It's a hold in the quant. Wall Street thinks that it's worth $76, which is 32% downside. You can see there's not really a change in any of these factor grades. So more than likely, it's going to stay a hold. And it's been a hold all the way since 25. And that was just in July. And we are at 114. Why? I think it's this 17% short interest. And I brought it up in the July watch list that this one could pump. Well, here, go back to June. You're still in this one in the 4-hour algorithm. You are still in this one. If you use the 4-hour algorithm and just said, you know what, I'm going to buy here at this $20, you're in. You're up 482%. Again, if you didn't get in and you didn't know when to get in, find a strategy that works. You don't need TrendSpider, but find an effing strategy that works for you. Something that gives you confidence. Something that can identify your risk and reward. Energy is continuing to move. Now, how about these? This is part of the AI market. Navitas builds silicon that converts energy into compute while EOS stores it to keep workloads running. Add these to a watch list. A hidden gem of a great trader and investor is building a good watch list because you can't take action on a day that somebody tells you to just go out and buy. You need a little bit more research, but Shai's showing you his portfolio right here. He's up 252% in Navitas, 367% in EOS. It's not much money. Again, these are small positions to me, but they're life-changing for Shai. He's talking about building a house. Again, make sure that you have these stocks in a watch list. Now let's talk about the other hot sector. It's rare earths. Honestly, I don't even know what rare earths is. I'm probably going to do a newsletter where I discover what rare earths are. I have no idea. I just know that they're minerals. MP has been on a tear. 1 month, you're up 49%. 5 days, you're up 31%. 6 months, you're up 257%. And the factor grades haven't changed all that much since 6 months ago. You could have had it as a hold. Now, Wall Street is saying the price target is 77. You're trading at $98 right now. 21% downside. Is that one that you want? So if you're like me, you have no clue when any of this stuff is. Shai breaks it down for you. This is the entire rare earth supply chain. China produces 60% of them, handles 90% of the processing. These are stocks that you should have on a watch list. Go and research them. Again, Steve Kress, if you want Seeking Alpha, he's basically telling you, here's the top miner and chip stocks for the rebound in rare earths. So if you don't want to do your research, read this. Just read this article. Then do your research whether the risk is worth the reward. And if you have Seeking Alpha, you can basically quantify things like this. HSBC says, 10 stocks to watch as Q3 earnings kick off. I really want these. I really, really want these. Well, Seeking Alpha gives you the quant score of each. The top one is Broadcom at 3.47. Okay, does this make sense to buy? Maybe. Again, from a 6-month standpoint, you're up 92%. 1 month, you're down 5%. Is this the dip? Again, if you're looking at 1 month, this doesn't look like a great stock chart. Wall Street says that it's worth $385. That is currently 12% upside. The quant says hold, but FYI, it has been a hold over the last year. And 3 years, it was a buy down here at like 97, 98. You're trading at 344. Again, do your research, understand what you're buying. And that HSBC article that says, these are the stocks that we want before. Let me find that one real quick. There it is. We're going to open this one again. I can't get back to it for some reason. But there, if an article comes out like this and you don't have Seeking Alpha, make sure you can research what you want. There's a lot of stocks in here that are good stocks. United Airlines reports after the bell today. And growth is the key in this market. Again, growth, momentum. SPMO is a great ETF on momentum. Go and chart that one against SPY. But growth in this market, it continues to be great. If the growth slows down and you see the bubble bursting, these are the stocks that will burst because they won't grow. But these are AI utilities. These are great names to have in a watch list. Okay, IREN. I'm up 280% on that one since I bought it. I don't own any of these other ones. Nebius, I'd love to own. EOSE, I'd love to own. CoreWeave, I'm not a big fan of. Wolf, love to own. Applied Material, APLD, I'd love to own. So again, if it runs past your reward figure, let's go over this one. Dumb Money is putting this one in, TAC. This is a blueprint. If you get a great idea, and Chris is explaining it to you, TAC, go out and journal your own thesis, okay? Identify a downside you can live with and an upside that you're happy with. That's the risk and reward. Let's take a look at this one, TAC. He's saying it's a great buy, and he specifically tells you, don't go out there and buy this one right away. Well, look, the quant has it as a sell. Why? Well, we can analyze it with AI. And even you can, before we go in there, let's just look at why. They're warning you. Has characteristics which have been historically associated with poor future stock performance. It's overpriced, has declining growth when compared to other utility stocks to the point that it gets a sell rating from our quant. Is the quant be all and end all? No, Wall Street says this is a $16 stock. They have a buy. There are 11 analysts. But by the way, they're bringing their revisions down. So is TAC one you want to buy? Well, let's go look at a strategy. Maybe Chris has something right because maybe this one is in an upward trend. And FYI, it's in an upward trend. For our algorithm, had you buy here at $12.28, you're at $16 right now. And FYI, that $11, where did I get that support from? I don't even know. All I know is that I put a line in there. There you go. Right there. We identified this all the way probably back here on this dip in April of last year and probably this pullback. It's a utility. Want to know why I knew it? Because I basically went to this utilities and I said, TAC. This was the top up there. Now, Talent Energy is one that I've covered before. It's in the portfolio to beat the S&P for the year. If you're a paid subscriber, you have access to that on Savvy Trader. And what does Wall Street say that TLN is worth? Well, they say it's worth 5% upside, 438. Don't you wish you would have bought it when it was a strong buy? down here at 245 because you're at 417 right now. And that was around where I put it in the S&P portfolio. So again, understand what you're buying. This is a great graphic. You know, the AI revolution. You need compute, Nebius, IRN, Cypher. You need energy, which is Oklo, which, by the way, has no revenues. VST and CCJ, far better companies to invest in. You need the grid, EOSC, FLNC, NEE. Go and do the research. Understand what they do. You need robotics, RR, Path, and Serve. And you need space. And space, by the way, includes Rocket Labs. It includes, some of the other rocks like ASTS. But again, understand what you're investing in. Now, I want to go over here on Seeking Alpha. I can just scroll down here and I have my own personal earnings calendar right here. Okay. I can see exactly what's coming up. So I know that Bank of America reported this morning. The Bank of America, by the way, is soaring. I said it's a $50 stock. It's at $52 in pre-market. I think it was up at like 53. But again, I know all of this because I have a personalized a calendar here of all the stocks that I follow. Taiwan Semi, Cleveland Cliffs, GE. And I want to go over one because I was watching CNBC yesterday and GE popped up. And the CEO, the new CEO, the stock is up 11-fold, they said, in 7 years since he took over. Okay, year to date, it's up 55%. 5 years, you're up 450%. So I want to show you a couple of ways to research this because Seeking Alpha just launched a game changer. Okay. I did go into Perplexity and I said, can you give me a preview of GE earnings coming up? Just say something like this in this one. Let's see what comes up. Let's see. It's analyzing your query. And I just want to see, is it expensive? You know, we're going to look at the upcoming earnings. And I will give you a freeway. Again, this is AI in Seeking Alpha. It's scheduled to announce earnings on October 21st during pre-market hours. It goes over the aerospace segment, continues to be the primary growth and profit. Again, aerospace, benefiting from a massive install engine base, robust order. It gives you everything that you need. Key takeaways. You can explore further the earnings summaries, the estimates. You can do a deeper dive. Again, whatever you want to do and research. Even if you just want to look at GE and you go back and you just put in the symbol GE. Let's see, I got to put it in. You can see it's a hold in the quant. It's a strong buy from Wall Street. Wall Street still thinks it has 6% upside to 320. And you can see the quant score hasn't changed much from 6 months ago, even 3 months ago. But the stock price has continued to just be on a pace. And if we go and look at the 4-hour algorithm, you build this in and you say, okay, I want this one. Well, if you bought this back in April, 179, you're doing really well. This one has a 56% win rate over the last 24 months. It doesn't beat buy and hold. But again, if you're worried about the downturn on a stock like GE, you have your risk and reward. And we saw this. And I even probably should have bought this on the April dip because 170, where was 170? Let's see. Oh, I probably have it in the 4-hour right here. It's a previous resistance point. Yeah. See where it resisted right here during August of last year? And then it popped up and it pulled back and it used it as support right there at 170. It's a good buying point. Again, just finding a previous high or places where it just dips. I'm no expert in this. But say you don't have Seeking Alpha. Well, just go to Perplexity. And it gives you everything. So here's the summary. GE's upcoming earnings are widely viewed as a potential catalyst for further gains, assuming results exceed or meet robust analyst projections. So again, use the tools that you have. I prefer Seeking Alpha. And you can get a free 7-day trial of Seeking Alpha Premium, including that AI stuff, if you go over to Linktree. Okay? I suggest the bundle. Why? Because the bundle saves you $159. This is Seeking Alpha Premium and Alpha Picks. You don't get a free 7-day trial because you get the portfolio. But if you want the portfolio, you can go in here. Steve shows you the portfolio on his screen. So get the free 7-day trial, get the portfolio, do it, and then sign up for the bundle. Disconnect and sign up under a dummy email address, whatever you want to do. But again, it's a great opportunity. If you don't have these types of tools, if you don't have a strategy, if you don't have a plan, you're just going to be guessing. And that's the problem. And again, if you have these tools like Perplexity, every day on my drive to the gym, I ask Grok, because I have a Tesla, it's integrated in there. And I ask Grok, I have trained it on my podcast, because again, the podcast is about me, and I've trained it on that. And I tell me one thing I don't know in the market right now. And sometimes it's good, sometimes it's bad. But continually learning about the market is how you're going to find success in the market. You will make mistakes. Look, I just showed you 2 gold stocks that I sold that are higher. Do I consider a mistake? No, I had a plan. I executed the plan, and it worked out, thankfully. But again, if you have a process and if you journal these things, I guarantee you over years, you will learn how to win more than you lose. And even if you lose more than you win, it's about the position size. It's about the size of those wins. Because if you have 10 stocks, okay, 9 of them could be down 1%. And they could be considered losers. But that one, if it's up 10%, you've all of a sudden become a winner. So if you have any questions, again, everything's on Linktree, linktr.ee/dailystockpick. It's out there. I'm available on email. I will talk to you tomorrow. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound.